Thank you and welcome into this video. I would like to take you through the whole meaning of a share. So, a share is just simple. A share is a small unit of ownership in a company. So, in case you get into a company, maybe we take it like is Apple, and you buy like 10,000 shares out of maybe a million shares in Apple company. So that 10,000 shares which you have bought, those are some of the shares which you have bought in Apple. So the whole analogy of shares is that a company usually try to raise capital by listing their stock in the stock market, where you can go in the stock which they have listed in the market and buy some shares. So shares are just small unit of ownership in a company, since when you take a scenario of owning 10,000 shares out of a million shares in Apple, you can see that you own 1% of Apple company, which you can be sharing dividends and also be enjoying the value increase or upside increase in price in the value of the company when it increases its value based on time, and also when it expands its market share and also its asset base. So this is the whole analogy of shares. So a share is a small unit of ownership in a company in layman's language. So to understand things and understand it better, we need to think of a company like a pizza, how it is roundish in shape. So a company is 100%, but since this company want to raise capital, it issued its shares in the market through initial IPO, what we usually call the primary market. So when it give out the initial IPO, this company is telling you to go and buy into the vision of that company. So you can get into that company, inject capital by buying some shares. So shares, they are subdivision or subdivision of ownership in the company. So you get into that company, maybe you buy 10 shares, 50 shares, another investor buy 100 shares. So that is the whole analogy of it. So the company is whole, but instead of going to the lending side, it goes to the listing side, where it can be able to be listed and now be able to issue shares to the public for the public to be able to subscribe in the stock market. So that is the whole analogy of the shares. So shares, they are small ownership in a company, since you can hold shares in different companies. So when you visualize like a pizza and see how you subdivide the pizza with your friend, so based on the contribution ratio, so after buying these shares, what you'll be enjoying is dividends from that company, and you'll be also enjoying the short-term price fluctuation in the market, since I say stock market is usually is speculative in nature, governed by something which we usually call fear and greed, which usually inform the traders in the market, which will get deeper as we progress. So what does a share give you? So this is what I was explaining. So a share can give you four things. It can give you dividends, which is a portion of profit when it declares is net profit at the end of the year or semi-annually or quarterly. So you can get capital gains through potential profit which usually aid in raising the share price, and also usually set a perception in the market where you get a lot of buyers subscribing to your shares. You can get voting right. So some shareholders who hold significant contribution or significant shares in the company usually they are given voting right of essential things in the company. Then you can get ownership. So you, by holding a stake in a company, you own that company technically, and you are eligible to get and to attend their AGM and give your contribution regarding to the way forward of the company. So a good example, we can take a scenario of ABC Limited, which have 10 million shares. Maybe we take a scenario where you go ahead and buy 10,000 shares in that company. You will notice that in order to get the value of ownership which you have in that company, you need to take those 10,000 shares which you hold in that company, because you just own part of that company, not the whole aggregate of that company. So what I try to explain, the company usually lists its stock in the stock market, where now you can go and start buying shares. Now it's like you are going there and start buying shares from that stock which is listed in the market. So in order to get your percentage of ownership, you need to take your 10,000 shares divided by the total number of shares multiplied by 100, which is 0.1%. So you own now 0.1% of the company ABC, which you can be able to sell to another investor through the what we call secondary market, since out of company when they get listed, that is the first time when they raise an IPO, the initial public offer, which is regarded as primary market. But in a lot of scenario, what we usually deal with is the secondary market in the stock market, because that is where we have the sellers and buyer who is an investor selling to another investor be in the market. So the big idea is here. We have the company. The company want to raise capital, so it uses your shares. We have the investor who invests in those shares. But before that investor even buy these shares, there is one essential element called the stockbroker, who usually come to bridge the bridge of information. Because in every market we usually deal with the imperfect markets, where getting information regarding the buyer, the available buyer and the available seller is quite too impossible. That's why the broker comes handy. So the broker can be a person, or now in the modern days, the broker is a platform. And now, after investor purchase these shares, now they start observing the market in order to make a potential return. So that's all this said, a share is an ownership. So a share is a piece of ownership in a company. The more share you own, the larger ownership or the larger stake you hold in the company. So that is the whole idea of this. So this is what I wanted to share with you. In case you have any query or any contribution regarding this, you can feel free to share in the comment section. In case you want to reach me at a personal level, you can contact me using my email, and also using WhatsApp by contacting the contact which I put in the description. So thank you for watching and have a nice day ahead.